please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back then. A few stocks that should come up for you on the screen. The Nifty actually is moving quite well. Axis Bank, that's the stock that's moved very, very well. It's up nearly around 4%. Remember, just in the last month or a little more than that, from the end of June, the stock has given you returns of nearly 20%. We're talking about a large cap stock that's moved from around 500 rupees all the way to around 600 rupees. And in the last few minutes, it's not just Axis Bank. Ashwini was telling us that the Bank Nifty on the whole is looking quite good. Yes Bank has moved to the high point of the day, so that stock should come up for you. TCS as well. Remember, the record date has been announced now. That's on August 18th. To tell all our viewers out there who are buying it for the buyback and you want to qualify under the 2 lakh category, on the record date, make sure that the stock price is, if it's at around 2,000 rupees and if you have 100 shares and if it goes above that, then you will not be considered in that smaller retail category. So just keep that in mind. If you're playing it just for the buyback, then that's an important point as well that you should keep your eye out on.
Okay, well, a lot of stocks in focus. In fact, it's a great time to get in some fundamental perspective. Then we have Brijesh Vaid, the head of equities, PMS and offshore advisory at BNP Paribas AMC, joining in to discuss exactly this. Brijesh, hi, thanks very much for joining in. Well, fresh highs every day for the Nifty and the Sensex. How exactly are you rejigging your portfolio, approaching the market?
Sure. So, while we do see a fresh high on the indices, we also need to keep in mind that the corporate profitability for India Inc. is actually touching new highs. We've seen that, many companies we've actually touched the profitability trajectory, which is at an all-time high. Essentially, on the portfolio front, we do believe that earnings growth looks extremely strong as far as FY19 and FY20 is concerned for the overall market. If we look at the overall earnings growth, even for the top 50 companies in India, is likely to be upwards of 20%. And therefore, we do believe that companies which are able to generate high free cash flow with a decent return on equity would continue to command a premium, and therefore the large part of the portfolio construct would be in line with that growth rate.
Well, Brijesh, the most heartening fact in the last couple of weeks is the outperformance you've seen from the mid caps in comparison to the Nifty. Now, they were playing a bit of catch up after a sharp underperformance in the first half of this year. Do you see money getting allotted as well to the broader markets, the mid cap, the small cap space? Because in June itself, no one was looking at them. But in the last couple of weeks, things have been looking up, isn't it?
Sure. So I think mid-cap and small-cap has gone through some restructuring in terms of technical changes that happened in the marketplace. However, having said that, what we believe is that, if one scans through the universe of fast-growing companies in India, you would find hardly, companies in single digit which are compounding at 25% plus as far as, larger companies are concerned. Whereas in case of mid and small caps, the growth trajectory looks extremely strong, and therefore while the premium has come down, it also poses a lot of opportunity on a bottom-up basis. What we also believe is that there is a lot of reforms which have been actually implemented in the country, benefiting largely the players which are catering to sectors where there is a huge unorganized play available. And a lot of mid and small cap companies are also benefiting out of this larger trend, which is getting translated into the earnings number now.
How are you approaching the entire banking space, especially post numbers from the big corporate banks?
Sure. So I think while banking has always had a two-leg story, the retail always continued to do well, and we already seeing that in the first quarter. That continues to be growing extremely well. As far as banks which had corporate plus retail as a segment, what we are seeing is definitely a bottoming out of stress case assets, and the large part of the growth for even banks which were high on corporate is primarily coming from retail. We do believe that on a risk-adjusted basis, there is an opportunity available for good franchisee banks which have actually a good presence in retail as well as corporate segment.
What about the flows picture, Brijesh? You know, I don't think we have ever seen that FIs have sold for 4 consecutive months. Now, towards the end of July, they seem to have reversed that trend. We did see them buying towards the end of July. What's your sense in terms of the DI flows? They have taken a bit of a break, but the FIs, they seem to be coming back as well.
Sure. So you're absolutely right. You know, the last time around we saw negative flow from FI was back in 2011, where for the full year we had an outflow of $400 billion plus. Having said that, you know, if we look at the overall emerging market, India has been one of the few countries which has been quite resilient, even in terms of the outflows that we've seen, essentially backed by the overall growth rate that we are likely to see compared to most of the other markets in the world. And therefore, while we have seen outflow, there has been a large amount of outflow in the emerging market. India has been one of the least impacted by that. As far as DI and MFs are concerned, I think, you know, that's one of the stories which is panning out, which is financialization of assets, and that continues to remain extremely strong.
Okay. All right, Brijesh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from BNP Paribas AMC for the Nifty, holding at 11,400. Good advance decline ratio, which is quite steady on our hands. So currently at around 2:1, or 1,500 stocks advancing for 871 stocks declining on the Bombay Stock Exchange. So you can see the kind of momentum or breadth which is sustaining in terms of the mid caps and the broad. Let's talk about some earnings today. It's almost the last week of earnings left, so we have a lot of them which will be coming out, especially from the broader markets, and a lot of pharmaceutical stocks also. But for today, it is Adani Power. That stock is up 2.5% ahead of its numbers. Adani Port rather, and Anisha is here with all of the key expectations. Anisha, over to you.
Well, yes, Ekta, both Adani Power and Adani Port come out with numbers today, but I'll run you through the expectation from Adani Ports. Now, we're expecting a flattish number when it comes to the top line, because remember, last year there was a 700 crore rupee income that we had seen on account of SEZ, and that made the numbers look very promising last year, and that's the reason we might see a flattish number this time. Margins are expected to remain stable around that 59% mark, though the profit might see a healthy jump to around 850 crores. Now, the estimates regarding the PAT are very wide, right, from a 670 crore number to 1100 crores. But there is a room for disappointment when it comes to Adani Ports this time, because in terms of the volumes, they have not been doing much in the last couple of quarters, given that the Mundra power plant of the company was shut, and that's the reason that the coal volumes have been lower, and that is expected to play out this quarter as well. Though other than that, volumes from containers is expected to be steady. The new ports are expected to support the earnings as well, but coal might be a bit of problem. Crude, on the other hand, might see a very significant jump up, because last year there was a shutdown of one of the refineries, and that volume is expected to come back. Other than that, keep an eye out on the SEZ income, because the numbers get very volatile on account of that. Tax has also been one thing which has been being very volatile for them, so watch out for whether there is some tax credit this time around or not. Other than that, management commentary remains very important, because remember, they had given a guidance of 200 million metric ton worth of volumes this year. Whether they are looking to revise it downwards is something we'll watch out for. Back to you.
Okay, all right, we'll watch out for that, but also keep an eye out on those flashes that are up for you on the screen. The Parliamentary Panel on Commerce, they have in fact said, and they have asked for immediate restoration of the practice of LOUs as well as LOCs. They are saying that in fact none of the stakeholders or banks said that the issues of LOCs or LOUs were flawed in the first place, and discontinuation of LOUs and LOCs, that in fact was a knee-jerk reaction, because they were trying to really grapple with that PNB fraud. Very, very important. This will come as a big relief actually to a lot of those small industries out there and labor-intensive industries. But Parikshit Luthra, he's breaking us all these details. Parikshit, over to you.
We're looking at this parliamentary report on commerce, which has really gone through the banking sector. We have seen especially the PNB fraud. So the parliamentary, has observed that there has been more of a knee-jerk reaction as a result of the PNB fraud. I have also observed that it seems that the RBI was generally under with a
bad line. But this should definitely come in as a big positive. In fact, this parliamentary panel on commerce was in fact tabled just 30 minutes ago. So this is something which would come in as a big relief, as Nigel said, especially for smaller companies, and that, you know, despite what happened with PNB as well as, you know, the use of LOUs as well as LOCs in that particular incident, you really can't, you know, extrapolate it. And it is maybe at some point in time impacting jobs, etc. as well. So this would definitely be a big relief for it to be brought back, and that's exactly what they've asked for at this point in time. Maybe we'll just wait by for Parikshit to come back and give us more details on this particular important piece of news.
Yeah, that's very important. You know, some of these large industries, they may not be impacted by these LOUs or LOCs, but if they're dealing with smaller enterprises that in fact definitely were impacted by these LOUs or LOCs, that will help actually, because, you know, business for those smaller industries, they will get a bit of a boost, and this is rather important. But I don't think we have Parikshit yet with us. For the time being, we have some news coming in on Power Mech. Well, they have bagged an order worth around 1,370 crores in Andhra Pradesh. So that's quite important because they have a good order book. The first, you know, the last quarter as well looked quite good. The stock has moved higher, and it's not corrected that much actually in this entire mid-cap correction that we saw. So keep an eye to that one. Maybe we should try to get the management as well. Slip into a short break, come back. We'll try to get you Parikshit with all those details on the parliamentary panel and what they recommended. Stay with us. Itself, we had KEC and HPL. Both those two managements were telling us that working capital, they had a bit of a hindrance out there because of these LOCs as well as LOUs. And in fact, as we told you earlier, the parliamentary panel on commerce, they have asked for immediate restoration of practice of issuing LOUs as well as LOCs. We have Parikshit, who's back with us on the phone line. Parikshit, fill us in. I hope we've got you on a better line.
Yes, sorry for the earlier interruption, but this report, which has been submitted by the Parliamentary Standing Committee on Commerce, the title of this report is Impact of Banking Misappropriation on Trade and Industry. It has been tabled in Parliament about half an hour back, and we have accessed the full report. And the report has been rather scathing about some of the reforms and measures that have been undertaken over the last couple of months. While the panel has been appreciative of the kind of prudence and some of the measures, some of the interventions by the RBI, they also feel that there has been an impact of the conservatism in the banking sector on the MSMEs. They said that the impact of these reforms, interventions, has been quite acute on labor-intensive sectors. This is what the report has mentioned in its conclusion. They've also said that the banking sector has been a victim of misappropriation through a fraud of unprecedented magnitude. They're also pointing out that there was really nothing wrong with the practice of issuing LOUs, LOCs, and all the stakeholders who have been called before the panel in the last couple of weeks and months. None of them, including banks, said that this entire initiative or the mechanism itself was flawed. So they've said that there was a knee-jerk reaction on the part of the government and the RBI post the PNB fraud because it was a fraud of such magnitude, and immediately following that, they discontinued the practice of LOUs and LOCs. So the panel has said that let's have immediate restoration of this practice, albeit with more safeguards. There should have been more engagement with various stakeholders, with those in the banking sector before this practice was discontinued. They also say that tepid business on account of RBI measures shall have a spillover on jobs and employment. So very, very strong measures. We're getting our viewers' responses and quotes from this. I'm also reading out a point from the conclusion which says the committee also feels the discontinuation of LOUs, LOCs as a response to fraud and misappropriation has set in contagion of conservatism in the banking sector. The caution has inadvertently made banks more inaccessible to the MSMEs. The committee is concerned that such an approach has the dangers of making banking services elitist and subservient to a few large corporates, leaving out the vast majority of MSME units which are not able to measure to the standards and parameters laid down by external credit rating agencies for getting AAA or AA ratings. So very strong words there. I'm going to take out more important points for our viewers. People are watching this report very, very closely, and if we have time, we'll give out more quotes from this as well.
Yes, absolutely, Parikshit. Thanks very much for bringing us this extremely important piece of news where the letter of credit mechanism or the letter of undertaking mechanism could actually possibly be restored, or maybe there is a plea for it to be restored after what happened with PNB. You can't really extrapolate it, and PNB was one such example. So that's the parliamentary panel on commerce, and more details coming in from Parikshit through the day on this important story. But I think we can move on now. The post of the Chief Economic Advisor, in fact, lies vacant after Arvind Subramaniam left office last week. Sapna Das got up with the DEA Secretary Subhash Garg and quizzed him about the same. So let's go across to that conversation.
The facts. On 26th of July, Arvind Subramaniam left as the CA, right? We had called for the applications. Last date was 20th of July. We have received applications.
How many, sir? Over 50, 60, 70?
We have about, I think, 15 to 18 applications. A committee is to be constituted. That is still to be constituted. Once that committee is constituted, that will take a view about the potential candidates.
So rather at least a month, 2 months?
So it may take less, it may take more, but that's the process, right?
But sir, isn't there a selection committee already in place that is headed by CAPSEC? So
no, not for the CA's appointment. We have always constituted a search cum selection committee in the department.
Okay.
When the last 2 times it happened, Arvind was directly appointed, but before it was headed by Dr. C. Rangarajan at that time. So there would be a committee set up by the Department of Economic Affairs, and then that will take the process forward.
When can we expect this notification, sir?
Which notification?
This one, I mean the announcement of the setting of the committee.
It's in the works.
Okay. 10, 15 odd days.
Let us see.
Okay, all right. One sector of stocks that are doing very well are all these paper stocks. You pull up actually a last 1 month or last couple of weeks chart, or maybe an Orient Cement, Orient Paper actually. You pull up some of those stocks, they're going through the roof. Today, in fact, that stock has moved higher. JK Paper in the last 1 month, the stock has moved from around 110 all the way to around 160 as we speak. So the last 1 month chart, you take a look at that. Orient Paper 40% higher. JK Paper is up nearly around 50%. Built as well is joining into this. We know the troubles that Built has, but some of these paper stocks, they've given you big returns. In today's trading session, in fact, Built is up nearly around 10% as we speak. That's the last 1 month. But all these paper stocks telling you that after that ban of plastics, that it seems that there is some more demand for paper, and these stocks are perfectly, reflecting that. JK Paper, in fact, those numbers as well looked quite good. On that note, we'll wrap up on Trading Hour. You stay with us. Halftime report comes up next.